Masterclass on film finance as an alternative investment. Our guest speaker is Michael Bassick, President and COO of Vendian Entertainment, and he will be presenting. Just to let you know, we have to clear the room promptly at 3 because there'll be a security sweep. Hand over to Michael.
Well, that's always encouraging. Security's coming in. Hope they don't take me away. Thank you all for coming out this afternoon. It's a pleasure to be here and talk to you guys about film finance. My name is Michael Bassick, and I am COO and President of Vendian Entertainment. We're a motion picture finance company, and we produce studio quality features for worldwide distribution. I oversee a lot of the corporate development and the fundraising activities of the company. I've had a career in financing in media for 25 years, or just over 20 years actually. I don't want to age myself, but and over that time have done all types of financing. The last 10 specifically with film, financing everything from development, early stage development, and acquiring rights and getting screenplays written and producing the movies, to all elements of film finance, debt lending, mezzanine financing, and then equity financing as well. And then thirdly, have also been involved in acquiring other people's films and putting up the P&A and releasing them out through theatrical and other channels. I financed over 25 films. I stopped counting somewhere along the way. I was formerly a banker with a bank that was now part of Bank of America, and covered general industries, and got my MBA from Babson College, which was my transition into being an entrepreneur and into film finance. Before that, I was in general industries and had some specialty groups, but then I made a transition out of corporate America into more fun film investing and media activities. So Vendian Entertainment, I'll give you a little background on Vendian and what we do, and then we've got a nice intimate group here so we can engage in some dialogue or questions and kind of try and have some fun with this to the extent finance is fun, although I think it is. So Vendian's a newly formed company. I formed it with my partner Chris Woodrow, who's here about just over a year ago, and we launched the company. We both have about 10 years back experience in the business. We've known each other for that long. We decided to come together and launch Vendian with a very specific purpose. Leveraging all the relationships we've had and our background and experiences, we kind of took that and constructed what is now our business model and financing model going forward. We produce studio quality movies, but independently with worldwide distribution. And our focus is on middle market, and both prestige and commercial films. We have a blend. And prestige meaning like, Oscar awards types of movies or things that we think can get there, as well as just mainstream commercial films as well. Budgets range anywhere from 15 to 65 million. We've done lower, we'll do higher, but that's just sort of the sweet spot of where we're at. And, we like to be opportunistic. We don't like to, every deal and every film is different and it has its own life and vision of what it should be. And so when we see opportunity, we want to be able to, jump on that and take advantage of it. We have a long-standing relationship with CAA, which is very valuable to us, provides us great access to projects, as well as helping us package and get the right talent attachments on films that meet the criteria we're looking for when we're looking to invest in a movie. So 2015, this year, we're just ending now, it was our first real full year of operations. We were involved with 7 films this year. We were co-financing a lot of those films. I don't want to run through the list, but we had one movie released this year, Black Mass, with Johnny Depp, that Scott Cooper directed. We've got a number of films coming out next year. Will be a big year for us. And in 2016, we are taking more of what we call like sort of the financial producer role on films, where we're going to take the lead and work with other co-financiers on some of the projects that we have. Our first big one coming up is we announced just before the American film market, which is Enzo Ferrari, story of Enzo Ferrari, of Ferrari cars, both racing and his high-end supercar business. So we're really excited about that. Michael Mann is directing that with Christian Bale playing Enzo Ferrari, and we're shooting that in Italy this summer, 16. So that's an exciting project for us. A number of other things that are on our slate as well. We'll probably do 6 to 8 movies next year, and that's our model. We look to do 6 to 8 movies a year in what we do. So one of the things we like to do, I guess we should just talk about the industry and the market a little bit and what's happening. I mean, overall, the film market is doing well. There's some underlying tones of what's happening in the marketplace with distribution channels. Theatrical is clearly always there. The studios are focusing more on tentpole movies. They've scaled back the number of movies they've done year over year and are focusing on a dozen or so big movies a year, which has left an opportunity in the market. It really allows a company like ours and others to come in and finance these movies independently outside the studio system, but go in and leverage their distribution capabilities, which they're really good at. The studios are good at marketing and distributing movies. There's no doubt about it, both in the United States and globally, for that matter. There's been a 35% increase over the last 5 years in independently financed movies. We see that sort of continuing to grow. There's where you're seeing a lot of the growth and for the types of movies that we do, which we partner with the studios, is where there's big talent attachment to it, a notable director, and we have a good underlying story base. And it allows us to play the best of both worlds. There's a lot of money out there in the world, and it's all looking for new ideas. And we come out and present to the world a face that says, "Hey, film's an opportunity for people to invest in." We sort of have a very curated way that we like to invest in movies, and we'll get into that later. But we like to work with strong production teams, experienced players, and de-risk what we do along the way. I think we all, it's generally perceived that film is a risky investment, if you will, and it can be, and it's rightfully dubbed that with the way some movies are put together. But there is a way you can be smart about it, and if you know what you're doing and how to structure things appropriately, which can generate the type of returns and rewards that investors are looking for, whether they're high net worth individuals or institutional players. Right now, we deal mostly with, so we do two things. We raise money from investors, and we find projects to invest in. And we serve in the middle as the, representing the financing side in finding out which films we should do, which ones we shouldn't do, or and just kind of guide the process, because it's a very complex web of activity involved in financing a movie and getting a movie made from an idea to on the screen. I mean, the credits are long for a reason. There's a lot of people involved, a lot of different voices, and so everyone's got an opinion and an idea, and so you always have to have a voice. And sometimes, investors who aren't in the business day to day and understand all the processes involved aren't informed enough to make those decisions or even ask the right questions. The global box office continues to grow. Reached $36 billion in 2014. I expect to see an uptick in 2015. China's leading the charge in that regard, both in box office revenues as well as expansion of screens. So there's some interesting, favorable financial and economic dynamics in play that make this industry very attractive for someone considering, putting some money into a film. Let's see. We talk with investors quite a bit about. The title of this panel was "Film Finance is an Alternative Investment." Okay, and so we treat it as an investment. And so what we do, we look at and we talk with investors. We talk to them about why this is an investment and not just something fun to do. There's certainly a universe of people who support cinema and film and want to put money into it to help see some project that they like, whether they know somebody, love a subject matter, and come about and want to come in and be involved in that process. Sometimes there are people who just like the lifestyle. We operate in a very glamorous business, in a very visible business. There's red carpet premieres. We've got parties. There are awards ceremonies. it's a fun investment. There's many successful people who, maybe do something a little more boring that have an allure to the film industry. And so those are people that are investors. I call them sort of social investors more than anything else. There's another group that are really financial investors. They're high net worth individuals, they're institutions, and they are looking for new ideas and new opportunities. When we sit down and talk with them, the conversation always involves about looking at your big portfolio. One of the things to consider when you're out there talking with investors, and could I just are there mostly filmmakers and producers here, or investors? A little mix of both? Okay, great. So from the producer's standpoint, it's important to sort of know your audience and be out there and sort of understand what it is that they're faced with at any given time. They look at stocks and bonds and real estate, venture capital deals, private equity deals. They invest in art, cars, you name it. And so, this is another topic of conversation in that mix. But so it's important to understand what those investors are looking at as far as other opportunities they have, and then make a compelling case and story as to why film fits within their financial objectives as well. And so, one of the key things, and what this chart identifies is, this is an investment that's sort of not correlated to their normal stock and bond portfolio. You'll see the black line is, the sort of returns from film as an investment versus, these are U.S. indexes with the S&P 500, the NASDAQ, the Dow, and then you see box office returns. So they're uncorrelated. In fact, when the market goes down and the economy goes down, people often seek to come and see movies. It's a fairly affordable, still, source of entertainment and recreation. So again, with Vendian, our investment strategy is to sort of look at moderately budgeted films. Again, Oscar-caliber movies as well as commercial plays. We believe having done movies of all sizes from I've financed movies as small as $1 million, and we're doing a movie as large as 80. So, in looking at that profile, and this shifts over time, sort of at the place we are now in the market, we're sort of focused on this middle range, middle market tier that have high potential to break out and perform theatrically. U.S. theatrical particularly is a driver of value in movies around the globe. I don't know if any of you guys have been out and tried to, talk with some international sales companies about your project and what it's worth, but oftentimes the conversation will go to, well, how's it going to release in the United States? Because that's going to be a governor of what the value is worldwide. If it's going to be released by Paramount on 2,000 screens, that's very different than, I don't know, I think we're just going to go to Sundance and try and get a deal from there. When we talk, we like to think of things as far as portfolio. It's hard to pick hits. As best as we can do to is the best thing we can do to try and make the right decisions. You never know which movies are ultimately going to work the best, but if you take a portfolio approach and spread your risk and investments over a number of films, that's a much more safe way to do it. You see it happen in the venture capital world a lot, the private equity world. There are mechanisms in industries that take advantage of all these things. And we use that as a form of risk mitigation strategy. We like to have a number of different films, and we like to invest in different types of movies. We like to we use financial structuring as a way to also risk mitigate. We like to test the market for movies. We have a film that has, here's the script, here's the actor, here's the director, here's a distributor. We can test the market to see, well, what do people think internationally? There are a lot of territories throughout the world, and there are a lot of distributors and buyers and consumers throughout the world. So, we go out and we like to, pre-sell our movies to a certain degree before they do. We shoot them in tax-advantaged areas, and we take a very, then we put in some money, the equity money, the last money, and we apply that against a North American release. We like to manage things through structuring. We're sort of financiers first and foremost. We do love film. Our whole team enjoys movies. We love the space, but we also have, our financial hat on. And we think there's tremendous opportunity there. We also like to be actively involved. I think a lot of times that's where nothing ever goes perfect along the way. But to stay involved and to be a part of the process is an important part of investing in a movie and sticking it through. Whether you're doing it yourself or you're working through a fund concept like us, those are ways that are helpful. And we also we have a strict green light criteria where we like to stick to what we do. We have our investment thesis and we stick to it. It's often tempting to kind of go astray, and there are certain circumstances under which that's okay to do. And it's the right thing to do. In fact, we've done it a couple of times already and it's worked out amazing. You have to go with your gut. The best way, the best PowerPoint deck and the best model you can build does nothing if sometimes your gut's saying, hey, look, I think this is going to be the right thing to do. And with all these other mechanisms in place, particularly a portfolio, you have the opportunity and flexibility to take a risk. And sometimes you take a risk that can be, a great success. And risk reward, that's kind of the name of the game in finance all the time. Final thing that with investment strategy, and it's good to have one, is that we'd like to own a piece of the copyright ultimately. That's the IP we create. We don't have. It's not like real estate where there's dirt and buildings to touch and feel. We create intellectual property, and so having an ownership stake in that creates long-term value with rights, and it's an additional source of revenue for us down the road. Should we choose to sell a library or do something like that. Our investment philosophy is based on 4 tenets, really. We like production-ready projects. We like strong talent. We work with reputable sales companies, and we have domestic distribution in place before we greenlight a film. Not all those elements are in place while we're looking at a project, but before we ultimately finally invest, we need to have those in place. And if we identify a project, particularly where we're taking a lead role in pulling all the financing together with all the parties, we're actively involved in managing that. And so that's sort of the philosophy we take as we look at various projects that we've got. This is again just another slide on our process. We like to opportunistically do a few films a year. We work largely with bigger with studio partners to distribute, and with some of the top international sales companies along the way. That's it. So that's sort of in a nutshell what we do at Vendian and how we think and how we view things. I think maybe we can make it a little more practical to what some filmmakers are looking at or considering as they go out to raise money for their projects. And we can talk about, if you're an investor, what are some of the things to consider as you're looking at an investment along the way. There's really 4 elements that fall within film finance. It's a big topic, but when you're looking at the financial structure of a movie, you've got debt components typically available to you, you've got some mezzanine components available to you, you've got tax subsidies, incentives, depending on where you shoot, available to you, and then there's an equity piece that invariably falls into with every picture. And so those are the 4 elements that drive everything. Not every film will use all of those elements. Some of them will only use one. Sometimes it's all equity. Sometimes a smaller film with a newer filmmaker or talent, will have to go out and equity finance their projects. And so, you've got to understand who to approach and where it's appropriate for your type of project. For movies that you want to go out and get some debt and from a bank, you need to have hard collateral. And what is that? In the film world, that's pre-sales. That's some underlying assets that the film creates or has. In some cases, it's a tax credit, and sometimes the tax credit is financed separately by an individual, or who can actually use the tax credit, or it's done as part of the banking financing. People who the institutions that typically debt finance, they sort of have rates of return in the 10% area per annum, That's where they play. Mezzanine is the next tier down. It's usually layered underneath bank debt. They're willing to take a little more risk in what they do. They'll look at those pre-sales, but they'll look at the value of the collateral unsold rights of films throughout the world and kind of make a determination on that. So you can add an extra layer of capital in there. The third, again, I touched on is the tax financing. Now, sometimes you will, depending on whether it's a rebate or a actual tax credit, rebates will just typically get financed for a bank, but tax credits can be sold to an individual or a company, and they will often pay a discounted rate in order to get that because it's valuable to them. And it becomes more valuable to them the closer it is to the date in which they actually have to make a tax payment. So that's something to consider along the way when you're constructing things and considering exactly what it is that you're going after. And then finally is this equity, and that's, again, like where we play at Vendian for the most part. We arrange all the other financings for our deals, but we focus on equity. Most films require some level of equity. It's very rare that you'll get a film that you could completely finance without it. It happens, but it's not a normal process. And when you're approaching these investors, they're willing to take a bet on the financial prospects of the film. They believe in the creative. They believe in the revenues it can generate. They believe in the passion of the filmmakers and the producers. But the bottom line is they don't get repaid until everyone else has been paid. And so, they're looking for returns of 20% plus for that risk that they're taking. And so often this is the most difficult capital for people to raise. And so you've got to find a network of people. Most of the times it's individuals. Unless you have a track record and have a business model where you can do multiple films in a year, you need to have, you can go to the institutional market, but that's often difficult for most filmmakers directly. Many investors or companies that are built up as a production company can often do that after time and a proven model and success. So where do we go from here? Does anyone have any questions along the way? I don't want to just do all the talking, but if anyone has anything, just feel free to raise your hand and say something. There's a lot of money out there. It's smart money and looking for smart ideas. I mentioned earlier, one of the obstacles to overcome is a negative stereotype of investing in movies. I can't tell you, there's countless people who have either put money into a movie or know somebody that did and says, well, it didn't quite work out. And when I asked the question further about, well, what is it you invested in and how did you do it? And a lot of times they didn't know. And so it's tough. As a producer, there's somewhat of a fiduciary responsibility to sort of share this information with your financier and let them know. You don't have to have all the answers, and you don't have to have, there can be many unknowns as you go through the process, but, communicating that and having them a part of the process can be very helpful to you down the road. Again, you also, when pitching investors on why, investing in a film as an investment option against all their other investment choices, you really, sometimes it's helpful to speak their language and do some homework as to, okay, what is it that they're otherwise investing in, because typically what they're doing is taking money out of one pocket and putting it out to another. And so they need to be, aware of and convinced as to why they should take money out of their stock portfolio and put it into a film portfolio. There are many factors to consider and look at when you're talking with an investor, things like liquidity, how quickly they get their money back. Investing in a film is not a liquid asset. It takes, a better part of a couple years to recoup it back if you start early through production and then finish the movie, get it distributed, and get the revenues coming back in. It can take a couple of years, which is not a long time when you consider if they're investing in real estate or other alternative assets like venture capital or private equity. Those actually get locked up for 7 or 8 years at times. And so this is actually a very attractive way and means for them to get their money back. You need to look at, what you're offering, quite frankly, to an investor so that the risk and reward is justified from their standpoint. Again, if they've got an investment in a portfolio that's making, 12%, and, you're only offering them 10, it doesn't make sense for them to do so. You offer them that's going to, something that's going to have them a chance to make, 20 or 30% on their money, they're going to have a little bit of an open ear. Again, it will depend on how confident and how much they believe that you can execute on the plan and deliver the results that you say you can deliver. But that's always part of the conversation. You need to consider the overlying economic, economy and what's happening in the world. Sometimes we get so focused on what we're doing and our passion to do our film project or whatever, we lose sight of what's going on in the broader community and what other people are experiencing. And it's like, and so some people may not be as willing to invest in anything because they've got certain, other issues that they're managing. Did you have a comment?
Are you looking at any project that doesn't fit the criteria of just the U.S. being secured? Meaning, like, if it's going to work in foreign markets, mostly, do you not consider it?
No, absolutely, we consider that. In fact, we did one deal this year that did not have U.S. distribution. We took a worldwide viewpoint of it to say, okay, here's a movie that's outside the box for us, but we believed in the filmmaker in the movie, and we worked closely with a sales company who could assess the value, and we knew we could quantify our exposed domestic risk to make the justification and the bet, and bet on the team. And I'm proud to say that was a successful venture for us. Kind of was an interesting deal because it brought in some. I can't give too many details, but we ended up doing a deal. We ended up working with Amazon for the U.S., believe it or not, but not just for their platform on VOD, but also in a traditional theatrical release. Their offer came with a P&A commitment and a large window for theatrical before it goes onto their VOD platform. So that was a case where, we kind of had a feel of things, but we weren't sure. But we took the risk and said, "Hey, look, we can do this and make it work, or we're willing to take the bet on that." It's all about taking calculated bets. We can't. There's no crystal ball. So in the right set of circumstances, that's absolutely a case where you can, not have domestic and focus on a sort of global play. Similarly, we often sometimes just take an international view. We have another project we did this year where we did not take a position on the U.S. and we took an international viewpoint. And so,
Are these projects in the minority or?
Our bread, yeah, for us, yeah, I would say 7 to 8 out of 10 will fit our normal. That's our normal business model. But we look to be opportunistic outside of that window, and we like to be flexible and nimble outside that window because opportunity strikes, and if you're too rigid in your thinking, you're going to miss something. You can go down the wrong path continuously, and it could result in bad news. So that's what happened.
Hi.
Hi.
With respect to pre-sales,
Yeah.
You mentioned that producers should come with their budget, schedule, cash flow, et cetera. Do you typically like to have them come with a sales agent as well, or do you prefer to have those go out after them and structure those deals yourself? And do you structure those deals?
It could go either way. It depends. It depends who you bring to the table. I mean, we have certain sales companies we like to work with. We know, we trust, we know they're bankable. We know that it's an easier glide plane for us to close an overall big financing when it's a partner we know and are familiar with. That said, if somebody comes to us with the sales company attached and it's a great project, we're not going to just discount it at face because of that.
Right, but you vet those sort of asks and takes, I imagine. And
yeah, we vet that. I mean, look, at the end of the day, it's a small universe, a small business, and so we're familiar with most of the players involved, and so we know, who is appropriate for us, and the representations we make for our investor base as well. I mean, we have certain mandates that we work with certain types of companies and people who we have relationships and track record with, and it doesn't stop us from opening up new relationships and we can vet them out. But yeah, every film is different. So it's about if it's a great play and if it's a great film, obviously we want to work with that and be a part of it, whomever that is involved.
Right.
Hi. I appreciate the questions. This is good because the best stuff comes from questions.
Hey, okay. So you spoke about obviously creating portfolios. Is that something you do internally, or do you prefer to be approached by production companies who have a slate of, say, 3-4 films, and then you kind of all invest in that and then recoup on, so it's safer for you?
We definitely construct our portfolios internally. In other words, we sit back and we say we like this project, this project, this project, and we internally are balancing our portfolio within that. We know we're taking a worldwide risk here, we're taking a largely domestic US risk on this one, we're doing international here, and we kind of like manage that ourselves. But that said, it doesn't stop us from looking at doing I don't know what the right word, technical term, but like a package deal with a production company to say, hey, look, over the next couple of years, we would like to work with you because we like your sensibility and disciplines and the type of things you do. Well, we will sort of work with you, not on an exclusive basis. We have to maintain some flexibility, but we wouldn't mind working with select partners. I mean, anytime if somebody's got we could track record of producing good content and delivering and developing, because one thing we will do a little bit is developing. I didn't mention it earlier, but having and curating your own productions from an early stage is helpful. But quite frankly, I think reaching out and working with production companies who are doing that themselves and building relationships tends to work for us a bit better. So.
Thanks. A quick question. I'm interested on the market survey you guys do to identify the kind of project you would like to go about, because you're obviously looking for profit as well, so it must be a selling
The types
point.
of projects we're looking for?
Or the kind of survey in the market you do for saying this is going to sell well and where and how.
We really have a calculated approach, and for the artists in the group, for me to say this is probably offensive, but it comes to math. There becomes a math exercise. We look at what we think a financing plan can be, and we go out and we work with a sales agent. We figure out country by country what those numbers will be, and we do a math exercise first and foremost. I'll tell you, I probably do that before I read a script. I love movies and I love the projects, but at the end of the day, it's hard to fall in love with something and then not have it work out. So we often go through that process first and say, okay, can the math work? Back of the envelope. There's always these details to be flushed out, and nothing's perfect when you get it. But if we see a pathway forward for it, that's what we look for and how we kind of vet it out. And we talk to people. We're fortunate enough to have a strong internal team to look at things and some external partners, whether they're sales companies or CAA who, helps advise on the domestic side on situations. We sort of have a great team. And then we have a number of producers that we just are friends and we can sort of bounce ideas off of and see what they think as well.
Is this on? Yeah. A lot of the projects that a lot of filmmakers try to pitch do not have any value if there's no cast attached to it. Being out here in this industry, it's really hard to find casting agents out there who we can even approach. Do you guys assist filmmakers from the beginning in that sort of process, or?
Yeah, historically speaking, we have not. That said, again, look, we're still a young company, but I have done that, and my partner's done that. But we as a company have not done that yet. Projects that we will get involved in in an earlier stage on, if there's something compelling, if there's the rights or a screenplay to something, then we would be, we're interested in that type of thing. Or if there's a filmmaker or actor we want to work with on something, we are interested in that. And we can help pull the pieces, because the three things, you need a filmmaker, you need a good script, and you need talent. And so most of the stuff we've done historically to date in Vendian is those pieces have come together. They're there. But Obviously, we work, it doesn't happen overnight that way. And, it's a chicken and egg, right? It's hard to get the talent, but, unless you get the money, but the money's not there if the talent's not there. So it's this whole, circle that you can get spun up in sometimes. But, look, we like to remain flexible. Sometimes there's something compelling to say, hey, I like this project. I mean, the first movie I did a development deal on, I'm like, I like the content. And it took 5 years to develop that and get the movie made ultimately, with a couple of starts and stops along the way. But it was one of those where, it was actually a unique movie because there were no major movie stars at all in the movie, but we had a great director. And so whom we approach after we found the content. So there's, content in the right project really drives everything. We're not in the business of building it ourselves necessarily, but we like to work with people who are building that, and we can help facilitate if we find, hey, this is something that we could be interested in. Yeah.
Also in terms of IP you were mentioning,
Mm-hmm.
how much do you typically retain?
That's a good question. That's a negotiation with. So when you think about typically how we do things is that when we're going to make a movie, we create a company that's going to own the rights to the movie. So it's about ownership of the company, and it's an ongoing conversation with the filmmakers and producers, and it kind of depends whom it is we're working with, and how much value we, in time and effort, we're putting in on the front end. If it's a fully baked film and all the elements are there, and we're just kind of making a yes or no funding decision, the rule of thumb that financial players get half of the rights of the IP, and then the filmmakers would have half. It's sort of a 50-50 blend. If we're coming in early, we may take more. If it's a certain type of producer, they want to grab a little more. It's really that's a negotiation that happens every time.
Doesn't that get messy though, because usually the SPV gets dissolved after the film is done, so then doesn't it get messy in terms of
My experience is those SPVs live on for a lot longer than you think. That's a whole other can of worms. You can't imagine how many SPVs are out there that are holding rights, and that goes to owning it. If you have enough of them, you can actually sell them out to somebody, and that library value. So you can monetize the discounted cash flows of that up front, and sell it out. But it's important is if you don't own the IP, you don't have much to sell. I mean, if you just have a contract for something, that's entitling you a share, and you're not an IP owner, you're not going to get the same level of someone's interest in buying out that piece of paper where you don't own the underlying intellectual property rights. So, anybody have any other questions or comments? Oh, you've got some good ones. Okay.
in addition to sort of sales and distribution, how involved are you guys in merchandising?
Not yet. That comes appropriate if you get a franchise of some sort. That really becomes into play. Like to have that problem. I think I heard some crazy number about the new Star Wars, and the merchandising that thing's kicking off is just unbelievable. I think I've been pitched some things years ago. There was a movie, I forget the name of what it was, but it had like a perfume line to go along with it, type of thing. Or everyone has. Those are big things to pull off yourself for just a one-time film. I mean, it's hard enough to get a film made sometimes. It's even harder to sort of start thinking about, merchandising a product or creating something outside of that. Now, if you have a franchise or you have a big enough movie, certainly that becomes a possibility. And there's a whole little, cottage industry built around executing on that. But, this gets back to your IP question. If you do own that, you then own the underlying merchandising rights as well. And so, again, if you don't own the IP, you don't own the merchandising rights typically, and so therefore you would miss out should your film be one of those that is worthy of, reaching that plateau. Have we put everyone to sleep at this point? In the back.
Can I just ask a little bit about
Yeah, and oftentimes that's the case. I mean, unless you have, look, the ideal situation that, from my standpoint, would be like, we own the entire copyright and you just have a residual stream that we splinter off to you. You know, it's, and from a producer's standpoint, they want to hold the whole thing. And so there's this battle, which is why we always end up somewhere in the middle. It's okay. I mean, I think, look, at the end of the day, when you're getting towards IP and monetization of that, sort of down the road, we're all in this together at that point. I mean, there's two things to consider, right? There's ownership of the IP, and then there's how the waterfall of cash comes out. And sometimes those two aren't the same. I mean, if I put in all the money of the movie, I'm going to get all my money back first. You can have 100% of the IP, but until I get all my money back, I get everything. And so it's a really equation for success in some ways where that comes into play. So, and that's a good problem. I mean, if the movie's successful, I think everyone who's involved should be a part of that success. So, they're delicate matters. They're dealt with on an individual case-by-case basis, and sometimes they're tougher conversations. Sometimes they're no-brainers. I'd say most of the time it's fairly, people understand. Like, okay, capital coming in is afforded a certain percentage, and the talent in the producing team another. We'll go back here.
Projects. I know that back in Los Angeles, we're able to do this almost on a monthly basis because there are pitch fests everywhere, no matter where you go. Out here, it's very different because most investors are looking at concrete investments, as from stocks to realty. How do we go about going to these investors without having a pitch fest and trying to convince them that, hey,
you've got to hustle.
Movie.
You got to hustle. You've got to make the compelling case. It's my opinion, it's a very valid investment in an asset class. One should consider. Now, you have to have a certain wealth factor to be able to afford yourself to even contemplate investing in any alternative asset, never mind film. But if you do, it's a very valid thing. But, these guys aren't just walking around with signs like, hey, I'm looking for movies. They need to be, you need to find out who's a proper candidate, and then make a very compelling case as to why they should consider you and what you have to offer is of value, and they could see some return on. I'm not, I don't know what the landscape is. There's lots, a number, LA is sort of central for lots of filmmaking activities, and sometimes we take it for granted there how easily inaccessible things are. But yeah, I think, through organizations like DIF and other regional, film festivals, and a lot of countries even, they support the arts in a way, and there are grants and other programs that they have to help developing filmmakers. I mean, they love art. In the U.S., we don't do that. But elsewhere around the world, they obviously do. And so I think tapping into those networks and other than that, and they're just building a, investment in a business case as to why or how, and somebody who's qualified could make an investment. You just got to hustle. I do it all the time. I spend a majority of my life, fundraising and then finding projects. That's it. And so it's always an ongoing thing. And sometimes you never know who that could be the guy sitting next to you. You never know. Can't tell you how many times you strike up a conversation with somebody and engage in the conversation. The good news is people like to talk about film. It seems like it's a fun thing. So they're intrigued by it. Did you have a question?
I wanted to know since the start of your company, what percentage has been financially successful?
We've only released one movie so far. So of the 6 we've done, only one's come out, and it was financially successful. So we're batting 100% on this company. I'd say overall, again, it's not about, my viewpoint is not about picking hits, and my partner would share the same sentiment. It's about we look at the whole, and when you look at the whole, it's profitable. I would say for things I've actively involved in, it's in the 20s% return annually. That doesn't mean everything hits, but if you structure correctly and you kind of protect yourself, you can't, the downside can't go too bad, but the upside is very strong. And so it really is sort of like a venture capital type investment where, I'd love to sit here and tell you we could bat 1,000, but that's not going to happen. On every film. But as a whole, we're confident in that. Look, we can deliver this through time. That's one of the challenges, I think, with investors, is that oftentimes you can get an investor coming in, but they fatigue out. They could have a success or a bump, and then they fatigue out. I tell people all the time, you got to ride the program, because you can't just come in and pick. It's like timing the market in the stock market. You can't do it successfully or sustainably. I mean, there are people who have, but if you ride through the duration and let the cycle go through what it is, you will have you can't say anything with certainty, but a very high degree of certainty that this will ultimately prove fruitful. If you're backing the right team, working with the right people, and you know what you're doing. I mean, I don't know if having invested in every possible way of a film, from distribution through development, going backwards, I've seen cash go out and come back. And you really need, when you see that, you understand where the pitfalls are. Sometimes the pitfalls are not where you expect, and you learn from that, and you move on. I mean, I've had a movie that was worked with a company years ago the movies were successful, but it was something else at the company that brought everything crashing down. It was crazy, and you wouldn't have expected it the way to unfold, but it makes you wiser. And ultimately, things worked out, but you never know exactly where these things are going to come from. Yeah.
When you talk about mitigating risk on a film, what sort of percentage do you look at in terms of your equity investment versus your pre-sales, incentives,
so
et cetera?
in a perfect world, everything's different. You're somewhere between 20 to 30% equity. That's sort of a place where we like to be against North America. So when we pre-sale and we use tax subsidies, we're left with 25, let's call it, % equity. That's against a widescreen U.S. release. And international overages, unsold rights that we did not pre-sell, as well as the overages from it performing in Germany or Japan, Australia, wherever.
So you'll typically back into the domestic once it's...
Yeah, so we know, like, okay, based on at 100% of budget, our risk is really 20 to 30 of the entire pie. And we look at 2 streams of revenue coming in, international overages against a wide U.S. release, and we look at it that way.
Do you structure these deals as a straight-out acquisition where they're giving you X amount and then they handle P&A and distribution? And
No, we actually take, so this is
deals?
a good point. We actually take the retail side of that. We put our bet with the consumer. We think we're making a good movie. We're not looking for MGs up front to get out. That's certainly possible. A lot of that happens. You go to the festivals, you look to sell your movie to a distributor, but we partner with them. So we will, we don't need to be paid back from them releasing the movie. We'll wait till the movie comes out and watch the consumer vote with their dollars. Because at the end of the day, we believe, if we believe in what we make, why not ride that consumer wave? That's how you're going to make the most. And when you do so, you also ensure that you've got a little bit more of control over the process. We all hear about studio accounting. So some movies never make a dime, right? But that's not true. They do. It's all in how you account for it. So when you're a partner with them, it's a more helpful paradigm. Did you have a question?
For distribution, how expensive is it to get distribution for a film? For example, if I have a film, I don't have a star, or in the beginning, I don't have a star. So how much does it cost a distribution company, like a big distribution company, to commit to your film? So how hard is it to get it, and how do I get it?
Well, I think it starts with, I don't know where you're based, but there's 50 some odd territories of value in your movie. Okay, some movies won't play in some places just because of what they are, but I think it starts with looking at if you find a sales company that will help you navigate those waters, what they will charge you to perform that service varies. It could be as low as depending on the movie, but without big, it could be some 10 to 20%. It really depends on what that is. They all have there's no structured model. They all have their own. They look at a film and they say, hey, we'll do it, but it's going to cost you X. It's based on the budget of the movie because there's time involved. So they're trying to reach a finite number, and so it just depends on what they think they can sell through and how it comes. But it's not. I mean, I don't know. It would be impossible almost to do as a sole practitioner of I make a movie a year or every couple of years. Those guys are in the market. They know that they have the relationships. It's money well spent. We use them in all the films we do, and so it's they provide a valuable service for that. If you're talking about the end distributors, they have their own deals, but the sales companies are advocates for you. Like they're talking to the distributor in Germany and saying, "Hey, take this movie on," and they're not gonna. They're sort of your guide along the way. They know what's marketed, or what's not, or what's attainable, or what's not.
Thank you.
How are we doing on time? Anyone else? We've exhausted that subject. Okay. Oh, one more. Before we get swept out of here for...
You said that risk is, what was the sentence? Is rewarding? High risk
I have no idea what I said. No, high risk, risk is rewarding. I don't know. High risk, high reward. I don't know what I said, but... Can you rephrase?
Actually, my question is, let's suppose you want to make a film and you think it's going to become a success story. I don't know how to explain.
You know how to explain. I hope every movie I do is a success story.
No, but I mean, the way you described your investment, it seems like sort of safe, sort of within a system. You ask the agency. So it sort of seems like available money for the system that's already there that protects you. And in order to make a success story, I believe, right, that you should be a bit different from that scheme.
Well, it depends how you define success. I mean, I think our story we believe is a successful story. I mean, look, the reason I'm in this business in some ways, I'm a finance guy. I mean, I love movies and media in general, but it's like a multi-billion-dollar industry. There's, it's highly fragmented with a lot of players in it. It's got a tremendous amount of, the financial elements of it are, they're moving targets, and there's not a lot of expertise in that space. And so that creates a big opportunity. And so what we do is we sort of build a funnel through which we de-risk what is otherwise could be very risky along the way. We make sure that we know the movie can be out and seen in the world before we make it, so that we kind of take that risk off the table. The movie has to be good and it has to perform, and nothing can replace that. You don't know until you get to the end of the trail whether it's a good movie or not. But we at least align up all the elements we can to take as much risk out of the equation as possible, but we still have risk. And so we, my track record and experience has been positive in that regard, but over the long term. And so, it's I don't know if we look to be opportunistic, like I said before, where we'll just do a worldwide deal or international. So we kind of manage that internally. We look at a sort of dashboard and say, okay, here's where we need to be, or we're too heavily exposed on one side. We need to be a little more, even that out a little bit. So, I mean, success for us is twofold. One, it's financial. Secondly, it's also, look, we live in it's a creative medium, and we'd like to see success and work with talented filmmakers. It's great to have, people recognized through awards, movies that you're involved with. Oftentimes you take a little more risk in some of those, and when they work, they're great. Some of it's just sort of box standard commercial. You kind of know what you're getting going in. So, I mean, I like to think, we define success and we see it, and, we just like to remain nimble. And I think all filmmakers should. Sometimes you got to ask yourself, oftentimes I'll ask a filmmaker, like, why does this story need to be told at the end of the day? Because you want to tell it, or is there who's the audience for this at the end of the day? Sometimes we get, focused on our own, I want to make this movie thing when maybe no one else wants to see it, or maybe the world needs to see it, and it's sending an important social message. Okay, I think that's all we have. Thank you guys, I appreciate it.
Thank you.